Hello traders, it's 8:01 a.m. Chicago time on Wednesday, the 21st of October, 2020. Thanks for joining me on episode number 1863. A reminder that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, really teetering on unchanged. Crude oil is the weakest link here. Crude is down 71 cents or 1.8%, trading at 40.94 in the December contract. The DAX is off yet again, 135 points or 1%. The S&P is teetering on unchanged, up a point, down a point, up a point, down a point. The Nasdaq's the same, up 2 points currently, which is just, it doesn't really mean anything. Gold is up $11.60, 1,927, and the leader today is the cable. Now, overall, there's still a battle, as it states in the Reuters morning call. Battle over a hefty new U.S. coronavirus aid bill was set up to spill into Wednesday as the White House and Democrats try to strike a deal before the November 3rd presidential and congressional elections, now with the encouragement of President Donald Trump. Very much a news-based trade yesterday. Just a strong pop on news that there's more support for a bill, and then a quick drop on news that nothing's been worked out and the parties are too far apart on an agreement. So keeping a close ear on the news for sure. After the market closed yesterday, Netflix reported the consensus forecast was for $2.14, and it came in below expectations at $1.74. This is one of the Fangman stocks, the big movers that really pushed the Nasdaq around quite a bit. Just completely missed. Index futures basically unchanged for the most part. The market stance is neutral after yesterday's drop, and that's where we're starting out this morning. We do have earnings. We have Tesla after the market today, expecting 56 cents on revenues of 8.26 billion, and Chipotle is expected at $3.40 on revenues of 1.59 billion for Q3. So let's move into what was expected yesterday versus what we got. I got to admit, for the second day in a row here, really difficult market to, as I said yesterday, really difficult market to get a confident hold on what to expect. The primary scenario yesterday was looking for a push maybe into 51, probably into the 44 area before it sells off, and I was looking for a drop, a continuation of what is this? A continuation of the prior day's impulse. So we had an impulse down, expected it to consolidate and drop below, and I was looking for it to push towards the 3405 area, maybe 3400. That did not happen. The secondary is a dip down into the 21 half area or 20 half area, and a push back up to the open for a squeeze back up into 56 or so, the single print from which this selling took place up here. That's more like what took place, but frankly, I would be kidding myself if I said that it was an orderly, a relatively orderly trade yesterday. I don't believe it was, and the chart here shows that it was not. So let's remove these stock zones for now and look at what it actually did. We put in an opening swing at 40. Well, what happened here? 3440.5 and 3430.5. We put in an opening swing right here. Very clean, clear, open auction in range. This is a very clear open auction in range. Starts to take out the high, pulls back towards mid, and we finally get our first impulse of the day. Squeezes into 53.75, 56. 56 is where the singles are. These are the single prints up here. And so what we started out doing yesterday is filling in this low volume zone, right? Low volume zone. Very nicely. Prices were rejected at around 54, could not quite push into the single print the first time, and then it starts to roll the other way. This was actually a classic market profile setup and a relatively easy one to see. And then we rotate down, and then the expectation on the way down is 25 and 23.25, which is the prior close, the PCL. The prior close, this orange line right here, and the basically the support that we got yesterday. I really should have seen that 27 here. Pulls down to 26.75, back to the mid, gives us a nice test of the mid after an impulse down. There's the impulse down, gives us a setup at the mid for short, and then it just was unable. I think the short was at 38 and a quarter, and then it was unable to get back to the IB low. So the auction down was quite poor. You could see the rotations are very small on the pullback, so relatively risky to hold on to. Finally breaks through, pulls up to the mid from above, mid and the opening swing, and then boom, it finally explodes into and closes the single prints. Another impulsive rotation, so look for a pullback for a continuation, and the continuation came along, and that was the high of the day, and then back into range it fell. Yesterday was an inside day. It was an inside day, two-way trade, and pretty decent scalping market, to be honest with you. But overall, what did we accomplish yesterday? Yesterday, we pulled the point of control up. We moved the point of control higher. We'll put in a higher low, lower high with value right in the prior day's range. The market's in balance yesterday and holding steady. These moves, this move here and the ensuing move up are news-based. The move down and the continuation are news-based. The market is just unsure of what to expect here, is what it's telling me. It's just basically moving on whim, and it is news-driven, which makes it a little bit challenging. It's really important to keep your news feed running. I'm not advocating, by the way, for trading the news. I don't trade the news. What I do want to know is if the move is technical or if it's news-based, because the movement after a technical move is different, very, very different than a news-based move. And that's why having a news feed is really important, in my opinion. I don't think I've traded a day in my career, 20 years, without the news feed running. I'm not going to trade numbers as they come out, or I'm not going to trade a news event, because there are algos that read the news through an API and can execute on it faster. That's not the point. The point is this moving? Is this failing technically as part of the auction, or is it moving because somebody said something somewhere? So that's where it matters. So far, we are forming this triangle. And we have an expanded range, a narrow range, and we're reaching the apex of this triangle here. We're starting to work our way right here into the apex of this triangle. Balance leads to imbalance, and so the overnight session was pretty much balanced. Multiple distributions, 1, 2, 3, 4. It's like Bart Simpson's hand over here. Uh, Multiple distributions, pretty active price discovery overnight, pretty decent range, 38 points or so, 37 and a half points. That's pretty decent. The volume at 267 is okay. It's just a tad bit higher than what we would expect. The market is sitting below the VWAP and the mid of the session. Looks kind of heavy with a higher low. So we are again coiling up here, and the point of control has just shifted actually from about, I believe the point of control was at 34.45 and a quarter right up here, and has just shifted down to 34.3675. It looks like. Let's see what that is actually, because there's a lot of clutter here. Yeah, 34.3675. And the overall profile is actually balanced. So there's a fair amount of coiling in here. The move out of here is likely to be relatively strong. Again, we're reaching the apex of the triangle as it consolidates and compresses in here. The move out of here is likely to be strong. Look, in normal market conditions, and I told you yesterday that the one-time framing or the trend on the weekly is down and on the daily is down. In a normal market, I'm jonesing, especially from the mid here, as you can see this test of the mid perfectly right here. I'm jonesing for an explosion to the downside to move to the next high volume node. And so I would expect it to rotate down to 34.0475, 34.04. That would be the key target. And that's a pretty decent trade, right? From 39 and a quarter, 34.04 on a runner, pretty decent trade. But the problem is the short trades for the last few months have seen very little in terms of continuation. Like this, it makes it hard to trade these trend days down, because there's a habit of making an impulse down, a parabolic move down, and then having a parabolic move back up. And so not a fan of hanging on to shorts, but with both time frames down, I believe that the market is likely to support a move down, especially since this impulse here is incomplete and all we did yesterday was stay inside. So really important for today, the 70. So the 70 is going to be important because that potentially changes the one time framing. Yesterday's low is also important, 1875, the 20 area, and then of course the low the other day at 1075. And that gives us the continuation move. Not a huge fan of selling beneath the 1075 here, but we'll see how it goes. Let's look at the day time frame or the daily composite and see what we've done. And as you can see here, we've moved back to the 38% of the move up. So 38% right there at 34.10. The low the other day is 10.75 in the day session. The 50% is at 69.50. The MC point of control is at 60. 60, 75, 61, and we are showing one-time framing down on the weekly. You can see the big box is lower now, has a lower low, and on the daily we still have a lower low. We're continuing one-time framing down. And yesterday, if you look at yesterday's candle, it shows excess on the buy side. The market opened, pushed up, found sellers, came back, pushed down, and closed down. This is, in my opinion, relatively bearish behavior. We're on top of the point of control of the last 2 days. The last 2 days overlap each other, and so the MC is valid, and we're above the point of control. And what this is saying right here in the 34, 36 area, we have a lot of energy from which the market can move. In my opinion, we are likely to keep moving down. And the next area down is, as I said, 34.04, and then beneath there, 33.94, and then we start moving towards the midpoint of the entire swing up and the MC point of control in this region. And then the big area is, of course, 40, 33.40. That is the MC point of control for this entire region here. That would be the big balance area, the big test area below. We just got out of here. I mean, it took us a while to get out of here last time, a few weeks ago at the beginning of the month, and we've moved up. And so that's where we stand. Okay, so that's the big picture. We are seeing the delta kind of falling off a little bit. We're seeing some selling coming in. I'm anticipating and expecting that this is likely to break lower. If the auction was to continue, we would expect a break to the downside. Let's take a look at what's expected for today. I'm not going to show bookmap today because I don't have it running right now, just to keep the broadcast smooth. This thing is really crawling. Okay, so what are we expecting for today? Let's take a look. Primary scenario for this morning is we are opening on top of yesterday's point of control right here. Very, very balanced, and I'm looking for the market to open, attempt higher. The overall inventory is even, is balanced. I'm looking for to open as long as it remains below the 50 up here. This 50 area up here, as long as it remains below, I'm expecting the market to be choppy and to let go to the downside. I'm looking for it to push through the 20. 20 is still important. Yesterday was 1875. 20 is a key area. If it takes out the 20, then we're looking for the 10. But really what we're jonesing for in terms of a target is this 0475 area. Becomes pretty important. Then we have the 00, but I'm looking for it to break down towards Monday's low, bounce back up, and then give up and move towards the 04. And if it's down at the 04, and if it doesn't bounce off of the 04, then we are likely to push through the 3,300 or the 3,400 and start testing that 94 before the bounce. So down we go, impulse followed by impulse followed by impulse with flags in between is what I would expect. Okay, so I would expect it to just flag and impulse down, and that'll be the continuation of Monday, and then what happens tomorrow will probably indicate, not dictate, but it'll probably indicate what is likely to take place from here. But again, with the one time framing down on both time frames, I'm really looking to push the short side, although that has not been a profitable thing to do in the last couple months. The secondary, an open auction that basically consolidates for a while, starts working its way towards the low, impulses up, comes back into the open, and starts to squeeze. A lot of this is highly, highly dependent on news-based events. We want to keep an eye on yesterday's highs. Very important. This area up here at the 70. Very well defined area, 70. Above there, we're looking to push to the single prints at 85. And of course, the overnight session gave us this 58 as a measuring stick for what we're looking for. We're looking for the 58 or the 20 to be broken. And I'm expecting the 20 to be broken. We have basically a local double bottom here. And that's what things are shaping up as. So that's where we stand today. I know here's the good news. The good news is based on my stock zone levels for the ES, we have really nice structure. Okay, really nice structure to trade off of. Some good, clear, defined risk support resistance zones with clearly defined risks and targets, so we can get our risk factors correct. So today is expected to be a pretty active day trading with some pretty clearly defined structure. So that's that. I'll leave you with those notes. Good luck today, and I'll catch you tomorrow morning. Take care. Oh, by the way, Friday I'm off. I may or may not do a trader bite. I'm going to be traveling with my in-laws just to be able to catch up with them. Haven't seen them much lately, and I'll be traveling with them. And Friday, I'm not sure if I'll do a trader bite or not. Just depends on the kind of action that we get Thursday and what's anticipated for Friday. Good luck today, and I'll catch you tomorrow morning. Take care.